Hey, welcome to my YouTube channel. My name is Nevin Williams. I'm a mortgage loan officer. And today what we're going to talk about is getting prepared to buy your first home. Now, you may not realize this, but waiting till the last minute is really not going to be a good idea because there's a lot of work you got to do to get prepared to buy a home. A lot of people don't realize that there's a lot of different things that can cause somebody to not get approved for a home loan. Little things could be the amount of time that you've been on your job, could be the way that you get paid. It could be if you're self-employed, maybe you haven't filed enough tax returns, or maybe you don't have a balance sheet or some of the other documentation that's needed. So I always recommend that if you want to buy a home, you should get pre-approved at least 6 months before you're ready to start looking to buy the home. The reason it's 6 months is it gives you time to work through whatever issues you may possibly have. So I'll give you an example. Let's say that you apply for a loan, you get pre-approved, and then we find out that there's some issues with your tax returns. They weren't filed properly. You now have 6 months to work on that. Or maybe there's something that comes up on your credit that you weren't aware of or shouldn't be on there. You now have time to dispute that and have that removed from your credit report. And that can make the difference between getting a low rate or a higher rate and better terms. The other thing is, if you get pre-approved ahead of time, you know whether or not you need to save more money and whether or not you're going to need gift funds. And it will also help you because if you're thinking about changing jobs, you may want to hold off on doing that until you buy your home. Changing jobs can sometimes lead to problems, and not always. Sometimes if it's a step up, you're getting a salary increase, you're getting some kind of a boost financially or through benefits, that can also be beneficial and helpful. But it's important that you paper trail that change very carefully, that you keep all your paperwork because we're going to need that to meet underwriting requirements. Okay, so the pre-approval, you want to do it when you're about 6 months out. If you want to wait till you're about a year out, just to kind of know where you're at, that's fine too. Pre-approval does not mean that you have to move forward right at this time. It just means I want you to do a checkup. It's a financial physical, if you will. I need to know what my credit's like, what's my employment, my income. Do I have all the things in place to be able to buy a home? And if not, what do I need to work on? And if I do have everything in place, is there anything that I can do so that I can make sure that I get better terms when it comes time to go buy my first home? So that's what you should be looking for. Now, there's going to be times that you can't do it. Maybe you have to vacate a property sooner than you expected. In that case, get pre-approved right away, prepare your paperwork, and have it ready for your loan officer. So some of the paperwork that we typically look for is we're going to look for income documentation. So if you're a W-2 employer, we're going to need 30 days paycheck stubs. We're going to need the last 2 years of W-2s. And depending whether or not you get dividend income or other types of income, or if you're self-employed, then we're going to need 2 years of tax returns. You're going to need 60 days worth of bank statements, and you're also going to need a copy of your photo ID, government ID, to comply with the Patriot Act. That's really just the bare minimum. And then we also need to know where the fund's going to come from if you're going to be making a down payment and to cover your closing cost. And that'll be a separate video, but down payment and closing cost are two separate things. I've run into a lot of issues where the customer thinks they just need their down payment. But what they don't realize is that there's multiple companies that are involved throughout the transaction of getting a home loan done, and each company is going to charge a fee. So the companies would be the lender, the appraiser, potentially the home inspector, credit report company, title insurance company, settlement agent, depending what state it is. It could be an escrow agent or a real estate attorney. You have government recording fees. And then in addition to that, you also have Prepaid items. Prepaid items are property taxes, homeowners insurance is paid at closing a year in advance. If you have an escrow account, you'll typically have to prepay property taxes and a couple of months of insurance into the escrow account so that way, when those bills come due, the lender has enough money to pay the bill in full and maintain a 2-month reserve in that account. Other things that you need to do is avoid moving money around. So the Fed is very, very picky about making sure where they can source funds from. And part of that reason is to combat money laundering. Money laundering was discovered in 2008 to be a really big problem. And so they clamped down. So now if you just decide to make a deposit into your account, depending on the type of loan you're doing and depending on how big that deposit is, they're going to want to see paperwork. Where did that money come from? If that money came from a safe and you deposit it in your bank account, you can't use that in a real estate transaction until that money's been sitting in your account for over 60 days. And the reason it's over 60 days is we're going to ask for 60 days worth of bank statements. And if we see this large deposit, we're going to question it and we're going to need proof of where that deposit came from. But if 2 statements or more than 2 statements go through your bank account and you don't see the deposit, then we don't need to ask for it because they're going to automatically assume that you had that money there for a very long time. So don't move money around. If you're thinking, hey, I'll move it from checking to savings, that's fine. But the more you move money, the more paperwork it's going to be for you. Other things about pre-approvals, it's okay to shop if you want to call multiple lenders. But you probably don't want to get too crazy on that because you start forgetting which lender you're talking to and you're sending paperwork to one lender and another lender calls and says, hey, I didn't get your paperwork. And you're like, well, I did send it. I've run into this with shoppers who don't even know who they're talking to. So I would say if you're going to do that, maybe pick 3, send your paperwork to all 3, do your due diligence, and then when you select a lender that you're comfortable with, that's a lender you need to do business with, and let the other lenders know. If you don't let them know, they're going to assume that they're doing business with you, and they're going to keep reaching out to you. They're going to reach out asking for paperwork, and you're going to get frustrated saying, I already sent that paperwork in. Now, pre-approvals, at least with a lot of companies, do not cost you money. Now, lenders can charge for the credit report fee up front, but many do not. And they typically will not collect a fee until the loan closes. Some banks will charge a rate lock fee or an application fee. But again, these are pretty far and few between. If you call 3 people, it's very likely that one of them is not going to charge any fees unless they successfully close your loan and you get the keys to the house. At that time, that's when the lender gets paid. There's also information about getting pre-approved on the CFPB's website. You can go to cfpb.gov and you can find everything that you're looking for. That is the government website, and the CFPB oversees all mortgage lenders. So anything you need to get without bias, without advertising, is directly from that website as a CFPB. Of course, if you have a problem understanding it, because it's not really spelled out in layman's terms to make it easy, it's better to just contact a loan officer, and then if you have questions, your loan officer can answer those questions for you.